Good afternoon to all of you, and welcome to the Q4 FY2022 earnings conference call. And I hope you have had a chance to look at the financial statements and earning presentation that were uploaded. So at the outset, let me share all the joy that the top line for the year grew by 32%, and we crossed a milestone of US $1 billion in terms of the top line. And as far as the PBT goes, profit before tax, again a milestone that we crossed 1,000 crore rupees. So that gives a certain kind of joy. The operating EBITDA grew by 42%, net profit increased by 69%, and all in all it resulted into a very strong cash flow available then for projects, which was around 1,200 crores, which helped us to reduce the net debt by around 400 crores. And looking at all this good results and looking forward to also the good times, the board has recommended upping the dividend from 75% last year to 90%. So now I was wanting to just broadly share that what do we see as undercurrents? How did this happen? And somewhere to share some of those insights. So on the face of it, it is obvious that while we had some severe raw material price jumps, unheard of jumps, ammonia jumped by 192%, phosphoric acid by 90%, propylene by 39%, gas by 58%. But we were in a position to enhance the finished good pricing also sufficiently enough to widen the delta. So that is at the face of it. But at an undercurrent level, some of the aspects that we see are these five. So number one, it got validated that all our products, whether it is the fertilizers, industrial chemicals or mining chemicals, all are beautifully aligned with the country's growth story. And, with that came in the positive current as far as the demand goes. So that aspect of it got established, and that was certainly a good support to make these operations, these results, to come in. The second aspect that got established was that, the 40 years of our working in this space and the efficiency in terms of the supply chain management, efficiency in terms of the manufacturing, cost optimization, all those in the challenging times of various disruptions, various COVID shocks, it also got established that those systems and those processes are indeed robust and they're indeed strong, and that also got validated by way of the performance. The third aspect that came in, and as you can see the results of it in terms of the results, financial results, is the emphasis that we had put on systems, processes, digitizing over the last couple of years and last year in particular. The internal world, we had put in a lot of emphasis on a sales and operation planning system where based on demand generation, one could plan right from raw material, inward logistics, manufacturing, outward logistics, market. So those systems in terms of internal systems, including the SAP HANA-based, dashboard-based systems, those certainly came in very handy during these kinds of volatile times. At the plant, we also brought in some of the smart factory digitization efforts. And at the external side, we have brought in, the Farmer Connect digitization efforts. So I would feel that these systems and processes also got tested and came in very handy during these kinds of volatile times and helped us. The next The third aspect, rather the fourth aspect that I see that certainly is, was the close proximity that we have with customers and understanding each customer segment, their needs, and their ability to absorb the higher prices. And that is something which, that understanding really helped us to, make sure that despite these kinds of passing through of the high prices of raw material, that we did not destabilize the end segment market. And, that aspect of it, we also saw that for our end customer, the impact of these prices are not very significant. So to that degree, we saw that gives an inherent long-term strength during these kinds of volatile period. Last but not the least, and the most exciting part of our journey, which we pushed through last year, and we are going to be pushing through very strongly in the coming current year and the next year also, is our journey from commodity to specialty, or a journey from product to solutions. And in each of the three businesses, it panned out in terms of very strong ground level efforts. So based on certain kind of emphasis on applied R&D, in the fertilizer sector, if you recall from the earlier days of commodity NPK, we had moved 100% to Smart Tech, which is, a very potent, I would say, performance fertilizer, which gave phenomenal results. And from Smart Tech now we have, last year onwards and continuing this year, we are moving to crop specific. So we have branded as Crop Tech. So some of the crop specific grades that came in, and that is something that is giving us a very positive traction. In case of the industrial chemicals, acids and IPA, so somewhere we have, kick-started efforts for solar grade acid or steel grade acid. IPA we have, besides the hand sanitizer, now we have started, pushing towards the hospital segment. So there again, the move from commodity to specialty. Plus, of course, positioning the product for the pharma sector that we did for IPA. So that aspect also is something that certainly helped. And in the technical ammonium nitrate sector, the mining sector, we brought in ANFO-based, various cartridge products. We started looking at, again, from product to solutions. We started looking at the TCO, the total cost of the owner for a particular line, and looking at innovative products that could help them. So this whole journey from commodity to specialty, or from product to solutions, is something that gave us, I would say, very positive tailwinds. And these are things that are going to be helping, even in future. So with that, how do we look at life ahead? And we see that, these kinds of, I would say, volatile environment emerging out of raw material price hikes, Russia-Ukraine, is something that is going to haunt us maybe another 3 months, 6 months. But having now learned to ride the volatility, we feel that all the 5 aspects that I mentioned are going to continue to support us. We are also seeing that because of some of these stoppages of manufacturing last year because of COVID or sometimes a little supply disruption, we still have certain further capacities that we have not tapped. We could not tap last year, but they are available this year. Plus, we had started some debottlenecking programs, which also we are seeing that, they will allow us a little elbow room in the current year. So those will come in handy in terms of, I would say, some additional, opening in terms of positive working. We are also seeing that with the China shift progressing, that there are some strong positive winds coming our way in the space of specialty chemicals, who then require as their feedstock our nitric acid. And so that's something that we are seeing, again as a positive wind blowing with us. And lastly, and not the least, as we see even further ahead, that the investments, the projects that we have taken up, both ammonia and technical ammonium nitrate, those are going through very strongly. In fact, on the ammonia project, post having got all the land, having got all the environment clearances, with almost 95%, 97% of equipment having reached, and the EPC with Toyo, that project is going into a very strong, closure swing. And we are talking about, I would say, middle of next year, when we should be, moving towards commercial production. So with all that put together, this I would look at as kind of a broad brush, in terms of the background within which the good results have emerged. But more details, Amitabh will take you through sector by sector. And of course, the team is available for any question and answer after the presentation. Over to you, Amitabh.
Yeah, thank you. Thank you, Mr. Mehta. Good afternoon, ladies and gentlemen, and thank you for joining the Deepak Fertilizer and Petrochemicals conference call to discuss the Q4 FY22 results. Our growth momentum continued during the quarter, and overall FY22 was an important year for Deepak Fertilizer. We have come a long way in our journey to climbing the value chain strategy that Mr. Mehta was earlier alluding to, and the same has started giving us the targeted benefits in terms of revenues and margin expansion. We still have a long way to cover, and major further growth is expected from this journey and the upcoming backward integration to ammonia project. During quarter 4 FY22, we reported a total operating revenue of 2,012 crores, an increase of 28% compared to same period last year. Our operating EBITDA increased to rupees 502 crores compared to rupees 273 crores in Q4 FY21, and operating EBITDA margins expanded to 24.9% from 70.3% during Q4 FY21. Our net profit for the quarter recorded a growth of over 144% to rupees 283 crores with margins of 14%. Finance cost reduced by 19% YOY during Q4 FY22 due to amortization of operating term loans and continued reduction of short-term debts. Overall, net debt reduced by about 400 crores during the year, and net debt to equity improved to 0.35x compared to FY21 when it was 0.65x. During the quarter, our chemical segment revenues increased from rupees 870 crores in Q4 FY21 to rupees 1500 crores in Q4 FY22. Segment profitability also improved from rupees 232 crores to rupees 523 crores in Q4 FY22. Manufactured mining chemical, that is TAN, business recorded a revenue of rupees 839 crores compared to rupees 400 crores in Q4 FY21. Mining chemical business delivered an outstanding quarter. Pricing of all products remained competitive. Margins in all segments, that is HDAN, AN melt and LDAN, improved despite adverse impact of increasing ammonia and commodity costs. This was achieved on the back of good demand and better realization. As far as acids are concerned, we are in the process of segmenting the market depending on the concentration of acids, their application and different end user segments. The robust demand for nitric acid due to improved consumption and enhanced prices of downstream products helped in realizing better prices and margins. CNA, that is concentrated nitric acid and dilute nitric acid, NSPs in Q4 increased year on year through DNA production volumes were impacted though the DNF production volumes were impacted due to ammonia unavailability and temporary mechanical limitations. IPA sales volume increased by 66% YOY in Q4, despite some production loss on account of mechanical issues. The propylene prices continued to rise. They rose almost 39% YOY, which impacted the IPA margins. During the quarter, our fertilizer segment revenues were 506 crore rupees compared to 702 crore rupees in Q4 FY21. Steep increase in raw material prices such as ammonia, phosphoric acid and MOP did impact the production cost of fertilizers adversely in Q4. We recently launched CropTech sugarcane and CropTech cotton on the back of successful CropTech onion launch in Q3 last year. During the quarter, our IPA plant operated at capacity utilization of 88%, and both acids and TAN operated at 77% and 100% respectively. In the crop nutrient segment, NP and NPK plants operated with utilization levels of 34% and Bensulf plant operated at 60% utilization level. Increase in raw material prices and disruption in supply chains were essentially the reason, as I mentioned earlier. The available capacity across our plants provides us headroom for future growth potential. And as Mr. Mehta was also mentioning, that we are also doing some debottlenecking in our plants, which should also give us the opportunity to further increase our production in our Taloja facility. Long-term growth is expected from our continuous endeavor to transform from a commodity to specialty player in each of the product segment, as Mr. Mehta was mentioning earlier. Increasing utilization levels, capacity enhancement and backward integration initiatives should also help us with the long-term growth. With this, we will be happy to take your questions. Thank you.